Hello and welcome to Startup Street. I'm Shruti Mishra and with me as always is Arundhati Ramanan. These are the top headlines from the startup space. Crisis hit Byjus to cut over 3,500 jobs as it attempts to get out of financial trouble. Sources say the cuts will impact senior and middle management. Byjus also likely to report much-awaited earnings since FY22 in October.
Consumer fintech startup Bright Money backed $62 million in a mix of debt and equity. The equity portion, amounting to $12 million, was led by Alpha Wave, Hummingbird and Peak 15. The fintech startup raised $50 million in debt from Encina Lender Finance.
Quriousbit, a casual puzzle gaming studio, has raised $2 million in its initial funding round led by Lomikai Fund, with General Catalyst joining as co-investors. The company will use the funds to build its team.
LinkedIn reveals India's top 20 startups of 2023. Zepto, Blue Smart and Ditto Insurance take top 3 spots. Some notable startups from 2022 missing on the list this year include Cred, Upgrad, Grow, The Good Glam Group and ShareChat, among others.
U.S. Federal Trade Commission and 17 state attorney generals sue Amazon, alleged that the tech giant uses anti-competitive strategies, inflates prices and overcharges sellers. Amazon says FTC has radically departed from its mission of protecting consumers.
OpenAI is talking to investors about a possible sale of existing shares at a much higher valuation from a few months ago. According to Reuters, the proposed deal could value OpenAI at between $80 billion to $90 billion, says Wall Street Journal. Those were the headlines that we're tracking for you this evening. Beloved edtech major Byjus has kick-started a massive restructuring drive under its new CEO Arjun Mohan. Sources say that the startup is likely to cut 3,500 jobs. This comes at a time when the startup is battling its lenders and has faced a markdown in its valuations. Aishwarya Anand joins us now with the details. Aishwarya, what are you picking up?
Byjus, which is currently in the midst of an ongoing tussle with its lenders over a $1 billion loan repayment, is now looking to get out of trouble and has begun the process of its biggest restructuring exercise under the leadership of New India CEO Arjun Mohan. CNBC-TV18 has also learned that the edtech giant Byjus is likely to file its earnings for FY22 and FY23 by this weekend or next week. According to sources, the company will cut 3,500 jobs in a fresh round of layoffs. The job cuts will impact staffers at manager, mid-manager and vertical leader levels. In a statement to CNBC-TV18, a Byju spokesperson said, and I quote, "We're in the final stages of a business restructuring exercise to simplify operating structures, reduce the cost base and better cash flow management." Byju's New India CEO Arjun Mohan will be completing this process in the next few weeks and will steer a revamped and sustainable operation ahead, end quote. Sources also say that the company felt there were a lot of redundancies in the system and is looking to consolidate and tighten teams in online as well offline functions. The move, however, will only affect Byju's India team and there will be no impact on Akash, Epic, Great Learning and other subsidiaries of Byju's as they operate as separate entities. Since late 2022, the edtech giant has let go of more than 2,500 employees. The most recent job cuts came in June this year when it laid off 500 to 1,000 employees. The company's headcount has come down from 50,000 in December 2022 to 37,000 at present. Back to you.
Thank you, Aishwarya, for those details. Now, amid these mass layoffs, Byjus has decided to rebrand its wholly owned subsidiary White Hat Junior as Byjus Future School. Now, this fully integrating the company's assets into other business verticals, including its holding entity, Think and Learn. The move is aimed at reducing costs to tide over an immediate liquidity crunch, says Money Control. In fact, sources have told Money Control that Byjus is set to rebrand White Hat Junior with an expanded offline presence. Byjus Future School is a platform designed to teach coding to children outside of India and has enjoyed synergies with White Hat Junior since its inception 3 years ago. Sources have added that Byjus will also factor in an impairment cost associated with White Hat Junior as it proceeds with the merger of the subsidiary in the current fiscal year. Now, remember, White Hat Junior, which Byjus acquired for a whopping $300 million in an all-cash deal 3 years ago, has been one of the company's biggest loss-making subsidiaries thanks to its high marketing and employee benefit costs.
Moving on, Quriousbit, a casual puzzle gaming studio, has raised $2 million in a seed round from Lumakai and General Catalyst. Now, the startup is founded by Ramakrishna Reddy YL and Shubham Joshi, who were formerly the core team members of Play Simple. Remember, Play Simple Games was acquired by MTG for over $500 million in 2021. Quriousbit intends to emulate the successful playbook of breakout puzzle games across subgenres in the casual gaming market, which is untapped and underserved. Joining us now to discuss the fundraise and the firm's plans are Ramakrishna Reddy YL, founder Quriousbit, and Saloni Sehgal, founding general partner at Lumakai, as well as my colleague Shruti. Hi, thank you so much for joining us on the show today. Ramakrishna, let me start with you. First, talk to us about your offerings. What kind of games do you plan to offer, and how soon? What is the kind of response that you've seen in your beta phase so far?
Yeah, first of all, thank you for giving me this opportunity. Yeah, I think you already mentioned, we are into mobile casual games, and we are trying to offer a very distinctive experience, very immersive experience into mobile casual games, apart from match 3 and word games and etc. I think if you look at a lot of these opportunities where there is a gap in terms of core game and in terms of deeper narrative, so that is where I think we are going to offer a great, unique offering in terms of our games. And in terms of timeline, I think we're looking at building a game with deeper mechanics immediately, and then get to unit metrics profitability in 18 to 24 months time, and then offer more games under our studio in the upcoming years.
Okay, so you're aiming profitability in the next 18 to 24 months. Saloni, this is Shruti. Let me quickly come to you. First, tell us what made you bet big on Quriousbit. How excited are you about the casual puzzle gaming opportunity in India, and how big is the opportunity for growth really?
For having us. Look, we're very excited about backing Ram and Shubham. The casual games market is about an $18 billion market, and it's been growing over the last couple of years. But what's been more interesting about this market is that there have been certain sectors within that market, larger market, certain genres which have seen breakout successes, but there have been several subgenres which are similarly growing, but yet haven't kind of seen the kind of innovative gameplays that Quriousbit are aspiring to build. The bar for immersive experiences, especially building for the global markets, has actually increased. There is a lot more pressure on gaming companies to be much more high quality. There is a lot more pressure around user acquisition, and also thinking of very differentiated distribution playbooks. For us, Ram and Shubham, having seen success from seed to scale to exit with Play Simple, having run 7+ P&Ls, having seen revenue cycles of $100 million plus, and having run games profitably, was a great was really great experience, and something that we rarely see in the India market, where you see founders having seen the full life cycle, and that's essentially led us to make this investment. We're also joined by General Catalyst, which is a large global investor as well, and we are aiming to bring a lot of our sector expertise and our focus, along with our large strategic networks, to be able to support the company.
Right. Ramakrishna, if I can bring you back in the conversation, you plan to use the funds to build a gaming studio as well as to hire talent. So elaborate a little bit on these plans. What will be unique about this studio?
Yeah, so I think we're going to build on top of our experience at Play Simple. First of all, I think we're going to use these funds in terms of getting a stellar team on board who have seen 0 to 1 experience and 1 to 10 at least. And at the same time, we are very clear about hiring people who fit with our culture. So that's something that we are trying to do it from day one, rather than just hiring people and then scale it and then figuring out culture later on. And the second thing, I think we're going to invest a lot of our energies and time and money in building tech infrastructures. Like I think Saloni was pointing about the disruption that are happening in the industry. So to tackle that, I think we're going to invest a lot of funds in scaling internal tech systems and analytical systems, to make us immune to the changes in the market.
Okay. Ramakrishna, Saloni mentioned earlier that the global mobile casual games market is currently worth about $18 billion. It is expected to grow 1.4x to $25 billion by 2027. Now, while the opportunity clearly is huge, tell us how you plan to generate revenues. What is your monetization strategy going to be?
Yeah, so I think our initial monetization strategy would be to tap into in-app advertisements and in-app purchasing.
Okay.
And eventually we will figure out different models like partnerships and direct deals and etc.
Okay. Saloni, let me quickly come back to you. And also, let's address the elephant in the room. The real money gaming industry is staring at a tax liability of over 1 lakh crores. What do you make of these show cause notices?
I think, Shruti, we've always maintained that, our mandate has always been much broader than, a sub-vertical and sub-sector. When we started investing in the market, our essential mandate was to look at companies building at the confluence of culture, technology, and new media. And when we invested across the landscape. We did content bets, we've done platform bets, we've done tools, tech infrastructure, we've done systems of play bets, and very soon we're going to be announcing a few bets on the frontier landscape as well. So for us, look, our exposure to RMG has been limited. It has always been so. I believe these matters are currently still while the taxation has been clarified, I believe the current matters are still being debated in the Supreme Court. And for us, we are more interested in seeing what is the future of immersive entertainment and gaming look like over the next 3, 5, 7, 10 years and a decade from now. And, that's been what's been guiding our investment thesis broadly.
Sure. And Saloni, you just spoke about your investment thesis. If you could quickly tell us, you just recently launched a $50 million fund for gaming and media startups. How many companies have you invested in so far? And what are the areas of interest, if you could quickly answer that?
Sure. So, Quriousbit is one of our first investments from Fund 2. We have another one which is going to be announced in another couple of weeks. The way we have essentially sliced the market, has been a little bit looking at the top-down and bottoms-up research that we have covered in terms of, where we see category leadership possibility for Indian startups. So, for example, Quriousbit is a great example of an Indian company building for the world. But at the same time, we're also very keen on looking at game developers who are building for the India market with very differentiated strategies. Last year we backed a company of Zynga executives called GigaFun Studios, who are building casual games but for the India market and innovative casual games for the after content, we've also looked at platform plays. You guys have, looked at Ilo, one of our social gaming platforms, very recently raised capital. So it's broadly a much wider bucket across the landscape.
All right. On that note, we'll have to quickly wrap up our conversation. We wish you both the very best for all your growth plans for Quriousbit. Many thanks, Saloni and Ramakrishna, for joining us on Startup Street.
Thanks for having us.
Thank you.
On that note, it is time for us to head into a short break. But coming up, good news for all the tea enthusiasts is Homegrown Indian teas and wellness brand Vahdam Tea has opened its first experience store at the Khan Market in New Delhi. We bring you a special report on the other side when we return. Stay tuned.
Welcome back to Startup Street. Homegrown Indian teas and wellness brand Vahdam India goes omni-channel and launches its first experience store in Delhi. The store aims to give an immersive experience showcasing Vahdam's range of high-quality teas, drinkwares, accessories and much more. My colleague Aishwarya Anand gives you a tour of what Vahdam India Tea Room entails. Take a look.
From being part of the goodie bag for the Oscars to part of Ellen DeGeneres and Oprah Winfrey's tea routines, homegrown brand Vahdam India has reinforced the place of India's tea legacy. It's the same tea I'm having currently, but in a different setting. Let me elaborate. Till now, you've been having Vahdam teas from their website, e-commerce platforms or stores and having it at the comfort of your homes or on the go to work. To answer the question as to why the setting looks different, it's because I'm here at Vahdam's first exclusive brand outlet in Delhi's Khan Market area. The Vahdam India Tea Room is now offering Indian consumers an immersive tea tasting experience with its flagship store. To talk about how this move will help Vahdam further expand its omni-channel strategy, optimize its business better, and help with expansion plans, joining me over a cup of tea is founder and CEO Bala Sarda. Bala, take us through the rationale behind opening your first experience store. Post the pandemic, we've seen an aggressive omni-channel push in the D2C space. The cafe culture is growing, startups are opening their own touch points. So after riding the D2C wave, was this the next natural step for you to take to complement the online business?
We were present in channels like online channels, online distribution, our own online store. We got into retail 3 years back. We are available in 7,000-8,000 stores in the US, for example, which is our primary market. But the EBO was something which we were really looking forward to do, because no matter what you say, I think the kind of experience you can showcase to your consumers in a physical setting is just impossible to do online.
Now, if you could just elaborate on the kind of experience that you want to give to your consumers and who is your target audience. Now, premiumization is the next big thing for the D2C, for the e-commerce brands, right? So how will you be priced?
Tea is a sensory product. So I think the experience we want to offer to consumers here is around the brand, around the hundreds of blends we have, around the flavors, aromas, blends we offer at Vahdam India. And while we make that available on our online store, this is a place where you can come, taste and then purchase. So that's really the idea with which we started this experience store. We genuinely believe that from a price point, Vahdam wants to be a brand which is, of course, 20 to 40% more expensive than the traditional products you consume.
Now, given the fact that you've opened your first store in the national capital, from a market share perspective, tell me what your expectations are, and also give us a sense of your expansion plans in India. In complementary to your expansion in India, do you plan on opening such stores in the international markets as well?
95% of our revenue at Vahdam India comes from outside, right? With US, Canada, Europe being our key markets. But there were several reasons we decided to open our first experience store here at home. In Delhi. One, as you know, that Delhi is the capital, and we have this amazing and growing number of tourists, expats, foreigners who come to this city, come to India. And while they are here, we wanted them to experience Indian tea in all its glory. This, for us, is the first experience store to what we believe could be many more globally, like the US, like Europe. In our phase 1, if I could call it like that, we will stick to the tier 1 metros in India.
In India, two big brands, catering to the tea-loving population is Quriousbit, Chai Point. They've already been in this, cafe culture and all of it. I just want to understand from you that, what's going to be your differentiating factor with the tea room?
That's an interesting question, Aishwarya. I'll give you an example, right? In India, currently there are two types of product categories within the overall space. One, of course, is your doodh ki chai, as we call it, the chai which you have with milk, sugar, which is what 80% of India's consumption is. But that's just one kind of consumption which happens more for comfort. And then there is this very, very fast growing trend and category of herbal, green and wellness teas. Vahdam actually caters to that segment, something which is more health focused. We have 70, 80 ingredients, right from superfoods like turmeric, ashwagandha, moringa, tulsi. That's really what Vahdam is targeting. That's what we are trying to solve for. I think India needs both of these kinds of categories to flourish so that overall tea consumption goes up.
You slipped into losses in FY 2022 after having recorded profits in the previous fiscal year, correct? What does FY 23 look like? Have you returned to profitability yet? And what's the target that you're setting for next year?
I think the last 12 months was about holding fort, right? But that said, I think, I think the worst is behind us. Today, I think in the current year, in the first 4-5 months, we're already at a 40% year-on-year growth with our bottom line significantly better. And I believe over the next 3 to 5 years, we want to continue to grow at that 40% growth rate on an average.
And before we wrap up the show, let's take a look at the funding picture. According to Traction, Indian startup funding has hit a 5-year low in the July to September quarter. Startups have raised $1.5 billion in this quarter, a 54% decline as compared to the same quarter last year. Now, late-stage funding rounds have witnessed a 33% drop in funding, while early-stage and seed-stage funding has plummeted 74% and 75% respectively. But despite the decline in funding, India remains among the top-performing tech ecosystems globally. The report highlights that enterprise applications, fintech, and transportation and logistics tech were the top-performing sectors in the July to September quarter.
Well, with that, it's a wrap on this edition of Startup Street. Goodbye and many thanks for watching from Arundhati and me, Shruti. News continues on the other side. Stay tuned.